Hello guys, I am a little late for today. Hope you are waiting. Sorry. Okay, let's begin. There is a change. The subject is not the same. So hello wise man, how are you? Sorry, I have been a little late today. Hope you are all good here. Good evening. Hey Benny Boom, how are you? Oh, you are from Indonesia, how are you? Nice to meet you. Nasti la noche. Bonsoir, comment allez-vous? So, how are you doing tonight? Now, in a few days, we are waiting for a hurricane. That's why it will be a bit problem. Okay. So I see 3 people here. So I will begin. Just try to wait just a few minutes until I see some people coming. Thank you very much for being here. So the southeast of America, from Florida to the northeast, there will be like hurricane, I guess, with Irma. So we are waiting. We are waiting for it. So okay, I see only one who is watching. Okay, I guess the people will come in a few minutes, and then we can begin our subject, which is how I trade stocks. For the people who might be in the future new, they will just try to see how things work. For those who have been here for long, they have clear idea how I trade, and doing swing trading, or what we call short-term trading. And we will discuss this tonight, this into details, and I will have to wait and then ask you, and then you can ask me questions about the subject of today. Okay, and you can ask me questions whenever you have questions, and I will answer them. Hello Nasa, how are you? Good evening. Nice to meet you. Rikoshi and City. Oh yeah. I see also there are 7 watching. Hello Martin Miner. I have been a little late for tonight. Few minutes late. And we can. There is no problem with that. I will be. So Girish Kumar, how are you? Hello everybody for tonight. We have 9 people are watching, so this is a good audience. For me, it's better to have a few who are focused on what I am doing than to have a lot of people who are not interested. So the people who come here most of the time, or 100%, they are interested. Good evening, Shubiki Achi. Sorry if I pronounce your names not correctly. Please, I apologize for that. Hello, RTV Cov. How are you? Yes, most of my students and for, people who are following me, they are here. Okay, let's try to see this subject, how I trade stocks. Now, 99.99 what I'm doing here is I'm doing what we call swing trading. Now, swing trading, it has another name. Some people, they don't know that it is called swing trading, and they give. Thank you very much, Wiseman. Thank you. I was sleeping. You know, I always sleep in the afternoon, and I just wake up in the right time, but I'm a little late. That's why you see me always drinking my coffee, because I until now the coffee is going up. This is what I tell always my family here, and my coffee is going from my feet, it goes up to my brain, so it takes time. So I might be right now sleepy, but forgive me this. Forgive me this until I wake up and I become so excited to talk about the subject. Now, a lot of people, they don't know. Yes. No, I wasn't preparing really for a hurricane. You know, the hurricane, they say it will reach us here in North Carolina like category 1, and it's not a big deal. Okay, we are far away from the big problem in Florida and Virgin Islands and the other stuff. So it's very good for us here. We are a little away from. Sometimes the hurricane changes his mind and goes elsewhere. Okay, this is what happened always. So you see people rushing, buying stuff, buying food, buying water, and buying a lot of things. And it's very good thing, because if things happen or the power is off or whatever is happening, so at least people get prepared. Okay, so as I told you, most of the people, when we speak about swing trading, hello Andrea, thank you very much. I try always to have the subjects that deal with swing trading directly. At least if I explain, you will get most of the knowledge. This is just in general, okay? Always when I speak more about my experience, about myself. I'm not speaking about what the other people do. Sometimes I will tell you what the people are doing. At least you will understand the difference. Oh no! It's not. No. It's not Martin Miner. It's not me who turns the hurricane to category 1. No, I said here when it reaches us, they say it in the forecast. As I told you, I don't predict anything, but this is what they say. Okay, it's like the market. Okay, I have no idea, and I don't care that much. When it comes, and we will see it. If this Irma, she doesn't come, okay, she is welcome here, no problem. So category 1, this is what they say in the news, that it will reach us, but very weak, because all the energy will be in Florida, Virgin Islands, that stuff. Okay, when it comes here, it comes weak. Now, so a lot of people, when you say swing trading, they have no idea what is it. That's why I have some students who they have never heard about it. Okay, it's just because of the name. When you see swing trading, there are a lot of people. They say short-term trading. They just describe what is this. Describe this trading. What is it? But they don't tell you what is it. Okay, short-term trading. We have day trading. So sometimes people are confused. What is this short-term trading? because if you can see short term, it can have a lot of meaning, okay, a lot of meaning. So when you ask someone short term trading, most of the people, they are confused. But when I say swing trading, people, they should know that there is something called swing trading as different from day trading. Okay, now I will just give you the difference, okay, between how I trade and the name of the way of trading I will tell you, and I compare it with other styles of trading and investing, and then we can begin with our subject. At least you will know where you are when you listen to me. Maybe you have been doing trading for 1 year or 2 or 3 or even 50 years doing, but some people staying doing trading for a long time, it doesn't mean that you know a lot of experience and a lot of information. Sometimes you stay 10 years, 15 years trading, but you are doing something that it is opposite of what's the trading style you are doing. Okay, so by the way, Martin Miner, when I say hurricanes go to category 1, this was in the news, okay? And understand that for me, I don't believe in the news. I don't believe, because they forecast, but the hurricane itself, no one knows where it goes when it hits Virgin Islands and Florida. Sometimes they say hurricane is coming, but it doesn't come. I'm not saying that the forecasts are lying, but they tell you, they predict what will happen, but most of the time their prediction is false. It's like those analysts, it's the same thing, okay? They analyze the market, they say in the future it will happen this and this, but you know, you find, for example, someone online, he has a channel and he's always speaking about catastrophe in the market. The market is as a catastrophe for years, and then the catastrophe comes, you say, oh, did I tell you? There is a catastrophe in the market, but you see, catastrophe for whom? It's just for investors who invest for the long run. They have big losses, not for swing traders or day traders who have this as a good thing. Okay. I have a question for Vincent. Based on your trading of when to enter as a stock, if a stock already goes up 50% or more from resistance line, it is too late to enter. Oh, sorry, Vincent, I'm not going to answer questions directly to my training. Okay, so here I am just exposing my general way of thinking, but it has nothing to do with the training itself. So for me, first, hello Pablo, you are late like me. I am late today and you come late. It's very good. So Vincent, I don't believe in percentage. This is first. So if you have a specific question, Vincent, please send me an email, explain what do you think or how my training is, and then we can discuss this into details when we have an email. Okay, so I think you have some of my training. If you have my training, please send me an email and we can discuss this into, at least you will not be confused anymore. Okay, so here is my website and my email. Send me an email and we can discuss this into details, because I don't believe in percentage. I have never said in my training that I trade because of percentage. I have never said that. So I don't know from where do you bring this. If it is from training, send me an email and we can discuss this into details. If you have not my training, I'm not going to speak about the training here, because here I give you just a general thing how I trade. At least you know where you are if you are trading. Are you doing swing trading? Yes or no? Okay, this is the main theme I am doing. I answer questions if they are general. If they are specific for a training, I will not give more explanation because it's not what I meant. Okay, let's continue. Now, swing trading is called also short-term trading. This is just you have an idea. For example, you buy books and you begin reading, and the guy doesn't say swing trading, and he say always short-term trading. So they are the same. Okay. Now, what's the difference between swing trading and day trading? Okay. Day trading, if you do the transaction of buying and selling in the same day, you don't hold stocks for tonight. This is what we call day trading. And there are a lot of professional, and there are a lot of newbie, or there are new beginners who are doing day trading because they think when they buy and sell a lot, they think they can make money. This is what they think. Okay? Now, if you buy a stock and you hold it overnight for many days or many weeks or many months, this is called swing trading. Now, this is the difference. So it is just holding stocks overnight, then you change from day trading to swing trading. The most important thing that you should know is that don't mix these styles of trading. I will give you an example. Let me drink some coffee. If you don't have coffee, bring something and just leave it near you. At least when I drink coffee, you drink what you drink, and that's it. So I have a question from Jordan. He say, Jordan, is making 100 a day too much still? No, making 500 or making 100, this depends on how much money you have, the capital that you have. Okay, so the good thing for Vincent or Jordan, if you are making money, it's good, because it's not each day you make money. Some days you don't make money because of the market direction. Okay, I'm speaking here about day trading. So if you are telling me that I am 100% each day I make money, and this is not true, because sometimes the market is so volatile, the direction is very hard to know. Okay, so you can lose some days when you are trading. Okay, there is no 100% strategy that works in the market. Okay, why? Because the market is volatile. It is people who decide about the action, about the price of the day or the swing trading. Okay, there is another Shubeki Ashi, a new question. Is there a limit to how many break stocks you can buy? Now, Shubeki Ashi, there is no limit what you want to buy in the market. If you have money, you buy whatever you want. There is no limit. You are free, depending on your money. Okay, let's say you have $10,000. You are limited with that amount of money. If you have 50,000, you are limited. 100,000, 500,000, 1 million. You are always limited with that price, with that money that you have. Okay, so buying, if you want to buy the whole market, which is trillion of billions of dollars, yes, okay, buy the whole market. What's the problem? If you have money. But I understand that you have little money, or you have a decent amount of money, so you are stopped always by what we call the buying power. Sophia and Golo, There's another question. Can I buy shares when companies offers IPO? Okay, be careful here. IPO, which is called initial public offering. Are you, Sophia, are you speaking before it was listed in the market or after? After it means it becomes public. If it becomes public, there is a calendar. Sophia, there is a calendar. You go to, for example, IPO calendar, you put it in Google, you will find many websites that giving you a new companies that they go IPO. It means they go public. And they give you the day and you should be waiting and then they comes. Okay. This is what I mean. It means when they get public in the stock market. But before they are private. Be careful of this. There are some companies when they begin IPO and they know their company is too weak, they try to sell because they know that their company is not worth it. Okay? So they have thousands of shares and they begin selling them before they go to the stock market, before they get listed. And this, man, I'm telling you, this is dangerous. Because you are bargaining, you are here doing a transaction and you don't know the market for this stock. I will give you an example. Some people, they come to you or friends or online chat room and they say, okay, there is a big company, a nice company, it's making a lot of money, it's in drugs or marijuana, or I don't know what they call it, or it is something, and then if you buy now, you will make a lot of money when it is public. Okay, let's say you buy a share with $1, just an example. You buy, for example, $5,000. It is $1, right? This transaction is between you and the company. It's not the stock market. You are not in the stock market. You are not with the broker. Okay? You are not in the stock market. You are dealing with this outside of the stock market. Okay? Now, let's say they become IPO. This is if they can, because sometimes they apply and they don't. Okay? Let's say they go become public and the market for this stock is 2 cents. You see it, it's 2 cents only in the market, in the real market. Do you know what does it mean? It means all the money that you sent is wiped out. All your money is gone. So be careful of this, Sophia. If you are going to buy, try to let the IPO on the market. It means you see it. Let's say like what did happen, for example, Snapchat. Almost no, Snapchat is a very good chat and it's very famous. But you see the price, it begins with $20, but it goes now, I don't know which price it is now, but it goes down. Okay, so you will be losing money if you don't know how to trade. And this is why I'm explaining here how to trade. At least you have an idea about it. Hope, Sophia, it's all clear for you. If it's not clear, please, here, Sophia, send me an email and I will explain I will explain more. Here is my website and my email. I will explain more for you and we can discuss this, which is this company and is it out of the stock market or it is public, and we can discuss this. Okay? Another question from Andrea. He said, if swing trade, what chart we use, daily, weekly, or monthly chart? Okay. You ask a question, I am going to be there, but you ask a question before, but there is no problem. We use daily. It means the candlestick that you see, it should be 1 day, and the chart, it will show daily, because we are looking for days. And this is how we trade. We don't trade with weekly or monthly because it will it will be so hard to do that. Okay, it's so hard. Sophia, thank you very much and welcome. You can ask me any question which is private, and if the company you are looking for is in public, we can speak about that. Jay Adisha, after breakout, how we can determine our target and potential to go upstairs? Okay, Jay Adisha, please. I'm not going to discuss details of the training that I do. Okay, I don't discuss it here, because if you are my student, you just go to the training. If you don't understand, you send me a private message and I will explain. But here, either a resistance line or support line, or I have many strategies. Okay, so these are specific for the training. Okay, so please, Jay Adisha, send me an email if you are my student. If not, just take any training, like training number 2, even with the ebook, because if you can't afford it to buy or to order videos, you can just afford ebook. It's 80% discount, and you can just study it, and then we can discuss this. Shibwiki, another question: what is the best way to select stocks, sector, industry, or based on the price? Okay, all this what you're asking, Ashi, is in my training. Okay, I can't go right now and spend 2 hours or 3 hours speaking about my training details. Okay, this is a paid training, so I'm not going to speak about this. Okay, I'm not going to speak about training itself. Now, as I told you before, you have always my email and my website. You can just go there and check, and then if you are confused what to order, please send me an email and I will explain more. Now, as I told you, the difference between day trading and swing trading is that if you hold stocks for many days, this is called swing trading. Now, what the day traders are looking for, how do they make their money? Day traders are looking for fluctuations of the price during the day. Okay, let's say at the open at 9:30, they see that the stock is doing good, and they buy and hope the stock is going up the whole day and they can make money. Okay, so this fluctuation from yesterday to today, this is an opportunity to make money. That's why we have millions of day traders in the world, and they do this. Some they can go to forex, which is currency pairs. Some they do options. Some they go even to futures and commodities, which is so dangerous, because you can lose a lot of money if you don't handle the trade, and you are not good. Don't go to this derivative trading, because it is so dangerous. Okay, now please, when you are day trader, don't mix day trading with swing trading. Now here how you mix. Let's say you in the morning you see a good stock going up in the morning, it's very good, and you decide to buy it. Okay, this is day trading. Normally you buy it and then you sell it during the day, because you are doing day trading. Now let's say you wait until 3:30 or 3:45, and then you see that you lost money. You lost $50 or $100 or $200, depending on your account and how much money you have. Okay, it depends on that. And then you get the idea, like 3:30 or 3:45, you get the idea to stay in the trade and to hold the stock for tomorrow, thinking that tomorrow the stock will go up again and you make back your money. Okay, you get your money back, and then you make a profit. This is how you do mistakes. Okay, this is how you do mistakes. You are changing your style from day trading to swing trading, not because you have a goal before, but just because you don't want to sell, because you lose money. Now, this is a problem for day traders and for swing traders. So keep things simple. If you are a day trader, continue to be a day trader. If you want to try swing trading, try to do swing trading, because they are different. The goals are different. A day trader tries to see the fluctuations of the day. It means if the price changes up or down, either you go long, like you buy in the morning and after a few hours you sell, or you sell short and after a few hours you see the stock is going down, you make money. This is selling short. And this is what we call fluctuation of the day price. Things change. Now, swing trading or short-term trading is different. We are looking for trends to follow. A trend is when the stock is going up for weeks or for months. This is called swing trading. We don't want to sell very early until we get a lot of profit, and then when the stock is not giving money, we sell it. Now all this I explain into my training very well, and I have my live trade. I stayed 4 months, more than 4 months, okay, following this stock. This is how you make money, but you are going to make thousands of dollars of each trade if the trade is good. You are not looking for $100, $200, $500. You are looking for thousands of dollars, even if you have small accounts, okay, like 5,000 or 4,000 or 6,000, small account. You can make it if you are in a good trade. Okay. And NASA said trading gaps can be very profitable in day trading. No, the gap app, for example, in the morning the stock opens at 9:30, the gap app is always there. So you are not going to make money from it because you didn't hold. If you are swing trader, NASA, if you are swing trader, you can make it. Hello, Hafiz Bouaishi, how are you? Now, as I told you, swing trading, we are looking to follow trends. Okay? Trends is when the stock is going up. It means there is a big buyer, let's say like mutual fund or pension plans or insurance or big banks. They are looking for a company and they are buying little by little. They can't buy it in the same day, because you will see a very long spike, a green candlestick. No, they don't do that. Why? Because they don't show their hands. They buy secretly. They don't want to be known that they buy. After a few months, yes, if they buy more than 10% of the company, you will find that their transaction is seen in the stock itself. If you go to Yahoo and you check the company, you will find the big holders. You find this big guy, mutual funds or a broker or whatever, okay? Because the broker, when we say the broker, it doesn't mean that the broker buys, but the customers, I think, who are in this broker, they bought a lot. Sometimes you find mutual funds that are known, and you see their names, and you know they bought this stock, okay? So this is what we are looking for, like a swing traders. Just to make the difference, at least you will not be confused always. You begin with day trading, and then if things go bad for you, you hold the stock, and then when you hold the stock, after a few days, you will be losing a lot of money, and this is not a good way to do trading. Either you do day trade or day trading, and you use the techniques. I have training level 12, how to day trade using chart and candlesticks. If you are interested for day trading, you can go to that training and you get those techniques that help you buy and sell the stock on time. Now, we have another thing which is called, after swing trading, we have another thing which is called position trading. Okay? Position trading is you stay few months to few years. 1 year, 2 years, 3 years. Okay? These guys, what they do, position trading, it means more than swing traders. They don't follow just a trend in the market. They don't care about the trend, but they care about the company. If in these few years, it can become a big company. There is a big move, and they are waiting for this big move. They just want to buy and hold and looking for this in 1 year, 2 years, or 3 years. These people who are position traders, they use both the company information and the technical analysis. Company information, it means they know when they see the balance sheet that this company has a potential of becoming bigger and bigger and bigger. You have heard some companies, they are making a lot of money in 1 year, and each year they are making a lot of money, so this attracts a lot of investors, mutual funds, even mutual funds, because this company is doing so good. So all the people begin to talk about it. So these guys, they buy this company and they stay 1 year or 2 years or 3 years. They should know this company, okay? This is what we call position trading. And they use technical analysis just to see when they enter and when they sell. Just parameters they use or criteria they use. Okay? Now we have another question for Incredible Product. He said, hey, I found out that to get into company before it goes public, you need to become an accredited investor. It could be, but see, I'm telling you, if the company is selling before it becomes public, most of the time this company has problems. Okay? And they want to generate shares, and they sell them to the public. Most of the time it is word by mouth. It means I talk to you, you talk to your friends, and like this, because in real, no one knows the real value of the stock you are buying or the company you are valuing. Okay, although you know the company, maybe you know it, maybe it's a store you go it, like food, restaurant, or anything else. But the real market thing, you will never know until it goes to the market. So you will be doing a dangerous trade, because if this amount that you spend, and then the company goes public and you get lost, it means all the money lost, and the stock is going down too much where you bought, okay, you will have problems. Understand that most of the time, I'm telling you right now, if the companies are successful, they will have enough people, and they don't come to you who have $5,000 or $10,000 and they want you to participate. Companies who needs money, they need millions of dollars, so they go to big investors. They don't go to small investors. Okay, so understand that. Don't be that you have $5,000 or $10,000, you think that you have money, and because they call you, you are an accredited investor, and you begin to boost, and you think that you will become like Warren Buffett or something. Okay, so stop these dreams and understand that the market is competitive. Okay, you should, if you are going to pay something, you should learn how this company works, and if it is has a potential to become an IPO, and even if it is filing for an IPO, it doesn't mean that it will succeed. There are a lot of companies that don't succeed. It's just because they see what is worth, they find nothing. Okay, they find nothing. Less than penny stocks that you are talking about. Less. So most of the time they don't give nothing. Hafiz Bouaishi, forex trading? No, here we don't do forex trading, which is day trading. We don't do it. We don't do forex trading. We do only stocks. Now, Credible Product says, so unfortunately, only millionaires are allowed to trade these companies and made a lot of money from this. No, it's not. It's not that they are only millionaires. Because if the company is this company has problems, financial problems, yes, it will sell to you. Okay, it will sell to you because they know they will get their money and giving shares that the value you will never know. Okay, I'm giving you an example. See, Incredible Product. I will give you a complete, clear example you understand. Okay, you have a friend that has a successful business. It's just a small business, a store, for example. Either it is a mechanic, or it is selling shoes, or a gas station, or restaurant, and you see that he is successful. He tells you, okay, I am making $20,000 or $30,000 a month. I am making money from this business. Now, if you ask him, okay, can I be your partner? Most of the time, even if it is your friend, he will never accept. Now, why? Because he succeeded in his business. He doesn't need you. Even if he go to a bank and he make loans with a percentage, but he will never ask you to be a partner. Okay? Now, I will ask you the question, Incredible Product. Why you go to him? You want to invest in his store because you know he is making money, because he is telling you. But people, they don't share good things. I'm telling you, try to put it in mind. Now let's say this guy has a restaurant, but he tells you, I am in debt. I have problems. I don't know what to do. Okay? Are you going to ask him to be a partner? I think you don't. Why? It's just because you know that your friend, he has a bad business. If you put your money also, let's say you have saved money, 50,000 or 100,000 for 10 years or 15 years, and you want to do an investment. Are you going to give him $50,000 or $100,000, just an example, in his business that he has debts? No, I don't think so. And don't tell me, oh, I will do it. No, you will not do it. Now, why you will not do it? It's just because you know that his business is a failure. He doesn't succeed. So you are looking always for a friend who has success, not a friend who has no success. This is a normal thing. All the people, when there is something good, they want to be part of it. But when it is in bad time, all the people want to be out of it. Now, if the company, most of the companies, if they are in problems, they can send you a friend, or they say, oh, this is a good company, and if you want to buy 5,000 or 10,000, 1,000, whatever. This has been done before in the old days, okay? And the people, the investors, they don't know what they are doing. They put their money, and then the stock collapse, or this company is bankrupt, and all your money is gone, because no one will help you. Okay, you buy a business, but you don't know what to buy. They say to you it's good, but in real it's not good. So you understand the picture? If you are having some money, you should be careful where to put your money, because these things out of the market is a problem. Is really a problem. Okay, another question from Vincent. He says, you mentioned mutual fund buy secretly when they buy a stock. Then how to explain some stocks jump up 30% or more in a day? Now, this stock that they jump 30%, is it a gap up? If it is a gap up, it's not mutual funds. It is just traders. They play with the news. A mutual fund doesn't buy today and sell tomorrow. A mutual fund, they have rules. They don't play with these rules. It's a FINRA rules. They don't just buy and sell. They are not traders. Okay? Mutual funds are not traders. They have rules. If they want to buy, because they buy a lot, millions of shares into a stock, they will not show their hand, so they will wait and buy each day some shares, depending on how much they buy, until this comes secretly. Okay, but you see the trend is going up. So people like me, like swing traders or short-term traders, they buy this because they see the trend, but they have no intention to show you what they are doing. But after a few months, 6 months or 1 year, you will find if they buy more than 10% in the company as shares, you will find them in company holders. It means those institutions that they buy more than 10%, you find them. If you buy 5% or 2%, they would not care. The government or FINRA doesn't care, because you should show your face when you are buying too much from the company, like Warren Buffett do, and like what institutions do. When they buy a lot, more than 10% of the company, after they finish, it means not when they are buying. Understand that. They are not stupid, because if they say to you tomorrow I will buy, a lot of day traders, they buy from today, or swing traders, and they begin to make money, which is easy money. In the market, it is not easy money. No one tells you the secrets, especially mutual funds who move the market. Okay, so Vincent, if you say 30%, you are thinking about gap ups or gap down. These are the news about the traders. It's not mutual fund. Accredited product, you say in order to be accredited, you should be millionaire. Yes, maybe. I don't go to that section of buying directly from the company. When you have a lot of money, there are some transactions that it is done like this. Thank you, Pablo. Thank you for coming for this session. Although you don't stay that much, but it's very good. Thank you, the MD Trader. Nice to meet you here. And Incredible Product has another question. I have a question. Do most IPOs go down or up? Most the IPOs go down. Most of them. Now, why? A lot of companies, they need money because they are not doing good. Okay? In the real. And most of these companies, when they have their stock get listed, investors and traders, they decide for this stock. It's not the company who decide. You say, oh, I am a good company, buy me. It doesn't happen like this. Stock market has an opinion about the stock. That's why if you go to penny stocks, most of the penny stocks I have seen go down. Go just to my chart, for example, I'm using freestockcharts.com. Go to the chart. Go to prices under $5. You find the stocks that are $20, but now they are 50 cents or 10 cents. Okay, so be careful of the penny stocks if you want to invest. It happens sometimes, exceptions, yes, there are exceptions to the rule, but most of them, they go down. If you want to buy, you should see the history, and if you buy, try to be careful. If you know this company and you see the stock is going up, yes, why not? Why not to invest in it? Because here, here, what we are doing swing trading. We follow trends and then we stop. We don't follow the company forever. NASA, you say, same as the stocks, nobody wants losers. Yes, but see, there are big institutions, they buy a company in the past and it's not doing well, okay? And the market is punishing these stocks that most of the time they have no good earnings. So some companies, they have earnings, but they are punished. Look, for example, for Twitter. Twitter is making money. It is making money. But the mutual funds, they punish Twitter, okay? And if one day they change their mind and they begin to buying Twitter, it will be like Facebook, okay? But right now, it means from 2 years, it was $74. Now it's nearly 17. It doesn't show that, okay? So be careful when you want to buy stocks, especially when they go long for a long time. So Incredible Product says from the initial listing. Yes, the initial listing, it means the broker or the banks, they take care of this transfer from a private company to a public company. This is a very, very difficult thing to understand. You can read books about this, but it's not, even if you understand it, it makes no sense, because for us, we want to see a stock that you buy and it goes up. If it goes down, so no problem with that. NASA says, like Oprah Winfrey, she invested in one company for people who want to lose weight. She made $350 million. No, it doesn't mean that this is the stories that you see, okay? But this Winfrey, Oprah, did she tell you or tell the market that I am going to buy and I will make money? No. It could be losing money also, but no one knows. But when she make money, it is there in the market, okay? And it depends how much money she made, okay? And how much money she has. And if the stock, sometimes the stock doesn't, for people who have money, this kind of millions, if you have a lot of money and you put it in stock and you are right, you can make a lot of money. But what if the stock goes down? You will be losing such money also. So understand that when you do an investment, it doesn't mean that you are right always. Sometimes you are wrong. Twitter, for example, at the beginning it was 45, and then it begins to go up until 74, and we think, all the people think that the stock will be going to $200 or $300 in 1 year or two, which is true, but mutual funds, they take their money from Twitter and Twitter collapse. Okay, so don't say because I invest and I waited long, the company will appreciate. There are some companies that don't appreciate, but they go down and you can lose all this money. Okay, and this is just stories, because these people, the Oprah Winfrey and the other, you know, they are very famous people, and you know, and they have money before, they are millionaires before getting from stock market. They have millions of dollars. So we are not speaking about those. We are speaking for normal people who have not millions of dollars. Because when you have money, the good investments come to you. They knock at your door. If you, for example, you have millions of dollars and you are in a broker, your broker can say to you some investment that are lucrative, that they can make a lot of money. Okay? Good companies or think. But if you are not having millions, you have just 10,000 or 5,000, no one will talk to you. They will teach you how to trade. They will teach you in order to trade a lot, to take commissions and fees. That's it. But good investment, man, you will see it when you have money. Okay, and people accept you when you have money. When you don't have money, you have nothing. Why Why they should these people who are rich, they should partner with you that you are poor in order to make little money? No, they don't partner. So understand the market and how things work. NASA says if billionaires invest in some company, should we pay attention to those stocks? Now, how do you know? Oh, you are speaking about some billionaires like Warren Buffett. You know, understand that. These people, when they finish the trade, when they finish the investment, they speak about the company. When they finish, okay? For example, right now, some billionaires, they own some old companies. But they bought them earlier. They bought them in the 50s, in the 60s, in the 70s, where the market was so small. And the companies were so small. People at that time, they don't invest like now. So there is a big move in the market. Now you are at the end of the trend. And they say, oh, go and buy Coca-Cola. Coca-Cola, you should buy it in the 50s, 60s, or 70s. When it was just $1 or $2, okay? But right now it is so big. So when you invest now, like the other billionaires, most of the time you are not making money. You could a little bit, but it's not a big deal. Sometimes they go down. So how do you know these billionaires buy this stock, and how do you pay attention to these stocks? How? Okay, NASA, you are just following people who talk, especially in the big media, CNN, CNBC, Bloomberg, and the big media. They advertise for something that it is the end of these things. Okay, it's just like mutual fund. You say last year this mutual fund has done 25%. All the people like this. Okay, but why they say to you now? In general, they ask you to buy, but when you buy now, next year, when you are buying, they begin to sell most of the time. So you get trapped into this investment because last year it did 25% increase, which is very good, but this year it does -5%. Why is that? It's just because people they advertise. Mutual fund, they advertise. Companies, they advertise. Broker, they advertise. They advertise for what is good for them, not what is good for you. So understand this play. That's why for me, I don't watch what they say, because when you watch when they say, they try to hypnotize you in order to buy something that you have no clue. For example, sometimes most of the time I have never gone to news, but sometimes you find just by accident you were browsing for something and you find the advertisement. I know that it is the advertisement because see, okay, it's clear. They will show you the best stocks of 2017. Just an example. Now, how do they know that they are the best stocks? Because of last year, they do good. But understand that there is what we call industry rotation. What is good last year, it doesn't mean that this year will be good. Maybe these stocks will go down, all of them, and there are other stocks that come up. So there is what you call there is called industry rotation. Things change each year. I give you an example. Let's say last year utilities stocks do good. It doesn't mean that this year they will do good. Okay? This is just an example. So don't watch too much. When you watch TV too much, you will be getting dreams and you will be buying losers. Okay? Because if someone advertises, most of the time it is a loser. Although last year was a winner, but this year, God knows where it goes. Incredible Product says, but how can company go public with $95 like Facebook. No, no, no. No. Facebook doesn't go with 95. Facebook, it begins with, I think, $44. Why? Because the company is so big. The company is big, so the banks that they do the transfer from private to public, they estimate that the price of the stock is worth $44 at that time, or 45. Okay? But when it goes to the market, it opens at 45 or 44, the first day it goes to 38. Okay? And then it goes down until 1755. What does it mean? It means that the price they give is not correct with the market. That's why the market has been going down and down and down and down until 1755. So you see that. The people who bought the first day, they have lost their shirt. But if they continue to hold, and we see now Facebook at 170, that's good. But no one knows. Maybe Facebook with 1755 will go down and down and down, and now it is 1 cent. No one knows. Okay? So try to, for me, the market gives you the real value of the stock. If the stock is $1, it is $1. The value of the company share is $1. It means it is $1. Facebook is 170. Yes, it is 170. Google is 900. Yes, Google is 900. It's just because of the value that the traders and investors give to the stock. They like it. They like them. The stock will go up. They hate them. The stock will go down. Okay? So understand, it is just a game of price and value. So NASA, she says, she told Ellen DeGeneres 1 month after she invests. I don't know what you are talking about, but see, NASA, I'm not going to speak about what the people do online. I don't go to online to see stories of people who succeed or people who lost money. I don't care about these things. It is just for the public. It is information for entertainment. So NASA, what you are doing, you are going for entertainment. They tell you stories about people who make money, people who lost money. These are stories that they give to the public. For me, I am not into entertainment. Okay, I go to the stock market to make money, not to entertainment. If I want to entertain myself, let's say I go to watch a movie. Okay, I pay a few dollars, but I get entertained for 2 hours. That's it. This is entertainment. Okay, no one in the stock market, a billionaire, he's beginning to buy a stock. He tell you in the morning, he send you an email or send you a phone call. Oh man, you are poor, you don't have money. Please buy this stock because it will go up. No one is doing this. So try not to confuse yourself and to watch too much TV, okay? Because you will have trouble always. NASA, you say stock went from $4 to 24 a few weeks. Yes, it could be. It could be, no problem. It could be. Someone is pushing this stock, or maybe there is a newsletter and some people are pushing this stock. This is kind of manipulation. Okay? It happens in the market, but it's not all the stocks that are $4, they go 24. I have seen a stock that it is $3, it goes to 265 in 1.5 years. From $3 to $265 in 1.5 years. You see how much money those people who are holders of this stock? But this is exceptions in the markets. So NASA, you are explaining things that are exceptions, not a normal thing. Just it happens once. It doesn't mean that it will happen. That it will happen every day. Okay? Incredible Product says, also you said you got offered to buy it before it went public right from your broker. No, some people do when you have a lot of money. They just tell you if you want to buy. But if you have a lot of money. But most of the time, when you are poor, you don't have money, they don't call you, they don't ask you nothing because you don't have money. They want you to trade a lot like day trader, and they take commissions, or you take the margin account and you use their money. Okay? Okay, let's say a broker asks you for 5% interest rate. If he knows that this company will be doubling, will be from $10 it goes to $30 or $40, if they know this, why they give you money as an interest rate for $5%? Why? You ask yourself that it is just a game. They don't know nothing. For them is to sell the shares that they have for other clients or other companies in order to make a commission, a good commission. This is what they do. They don't care if the stock is going up afterwards or going down. So be careful. When someone approaches you and say, buy this stock, try to see what's going on. Because if you do a mistake and you buy stock at $10, but the real value in the market is only 1 cent, all your money is gone. It's just because you buy and you consent to buy this stuff without knowing the value, if it is true or not. Okay? So most of the people, credible product, they don't approach you when you don't have money. Believe me. As I give you the example. You have, for example, 2 friends. A friend is successful. You ask him to be a partner, he will say no. Okay, because you are looking for the money and he's always speaking to you. You say, man, I am your friend. I have a business. I am making a lot of money. You ask him, oh, could I be your partner? I say no. Because he doesn't need you. But another friend who has a company or has a store or whatever, and he is losing money and he is in debt. So he needs help. He goes to the banks, they don't give him money. Or they give him money with a high interest rate. So he can't make that because he will make more debt for himself. So he will even ask you for help before you ask him. But you understand that your friend is in trouble. And most of the people, when someone is in trouble, they flee from him or from her. Okay? That's why a lot of companies, they go bankrupt. Why they go bankrupt? It's just because they don't find help, because their model of doing business is bad. No one wants them in the market. That's why they fail. If a store can't sell, so most of the time they have no money. So they try to have loans from the banks or from friends, and most of the time they lose money. If they lose money, it will be a collapse of all these people they do. So, in order to get out of this trouble, you should follow strategies that when you buy a stock, don't expect anything. Don't expect anything and don't predict anything. You buy a stock according to criteria. If it goes up into a trend, you will make money for sure. That's the main thing you see in the market. You don't buy because someone tells you to buy. Sometimes even before I come across some pages by accident, and I see someone who is boosting advertising for companies, and you put the ticker, this company is excellent, it makes this and that, the company is successful, last year the stock goes 50%. They begin to boost this company, advertising for them. Now when I go to this company, I find that the stock is going down. It means that this company needs a lot of people to buy its stock to go up in order that the value becomes good for this company. Okay? So for me, when someone tells me a company, what should I do? I take the ticker of the company and I put it in the stock market, in the chart. Okay, and I will see, is it going up or is it going down? Man, if it's going down, I will never see it again. If it's going up and I see an opportunity to buy, yes, I will do that. But if not, I'm not going to watch people advertising for their companies or their mutual funds or the ETFs and they say buy this or sell this. Okay, so it's dangerous. So Don John, he say, how much do I need to start investing in stock? 1,000 or 5,000, whatever you have, man. And you say investing, are you looking for fundamentals to the company? It means you want to buy a few companies like this. You should study this, and you don't have that much money. Okay, but you can buy and leave. If you are an investor, you think that you can put more money in the future and the stocks are going good 5 years or 10 years, but don't expect from this 1,000 to become something big. Okay, if you don't add more and more and more in the future, like those people who put 401k. Okay, they add money each paycheck, and after 10 years, 20 years, 50 years, they can have a big decent money, which is very good. But doing something once, like you invest in a company or 2 or 3 once, little money, and then you forgot it, I don't know where this investment could go. So no one knows. Incredible Product says, that's what I do. I follow your training. Thank you very much. Yes, it's no emotions and no information from the analysts. This is the best thing I can tell you. Stop watching information from TVs, websites, and the other thing. Okay, because they bring stories, success stories, companies that they make money, but when I see them in the stock market, you find that they are not good at all. They are going down, and maybe they go to bankrupt, but they say something good because, okay, they talk. You can't stop them from talking, and this is what is their job, is to talk. They get paid to say what they say, and this is it. Okay, so the market will show you, if you follow the normal procedure or my training and how to enter, you should be out of the information from the market. It means from the fundamentals of the company, or people talking about this company, or news about this company. Forget about this. You will never make money from this like this. By exception, yes, you can make money, but it is not a real thing. You see the stock is going down. How can you buy it? Because someone tells you to buy. This is stupid. I'm telling you, this is stupid. And some people are having a lot of problems because they just hear someone and you say, oh, this is a guru, and he knows the future. He knows everything. Okay? No one knows everything, and no one knows what the future will hold to us. So don't focus on what the people say, but focus on the price, how the market is going to be for this market, for this stock itself. If it's going up, you'll be making money, which is very, very simple. Try to do it when you buy any stock. It's going up, you'll be making money. Without the help of analysts, without the help of the media, without the help of TVs, you are out of this, because they will distort your opinion. Because when you watch too much, they hypnotize you. Okay, they ask you to follow them without asking questions. They know and you don't know. It's like a dictatorship. If you lived, or you know what is dictatorship is, someone who has an opinion and he dictates you what to do. Okay, but you don't know even how this dictator thinks. Is it good for you or is it bad for you? But he will say to you, just buy today. After 2 months, sell. But you buy and the stock is going down. After 2 months you sell, you have a big loss. Is this what you are looking for yourself? So the solution for all these problems is to understand how things work. This is the only thing that it is beneficial for you. Okay? Beneficial because you understand why you buy, where to put stop loss, how to follow the trend, how to manage your account. You know what you are doing. So you are a knowledgeable person. You will be what we call an independent trader. You have your own opinion about the market. You buy according to criteria and you follow the stock. You make money and then you sell it. Okay? It's not just go switch on TV, on any TV, and look at this guru, what they say. Okay, buy this, buy this, buy this. Don't buy that, don't buy it. Because of a company has a change in the director, or because of the earnings, or because of this, okay? So don't be influenced by what the people say, but you should do it yourself. It means you should learn the strategies. You should understand. And for me, I have never let someone down. When someone is taking my training, I have never let someone down. It means you ask whatever questions, I try to help as much as I can with practical thing. And let's say, for example, for my live trade, I am into a stock for 4 months and more. I bought it in the 1st of May. I am doing live videos on how to follow the trend. Now, if you follow me, you will do the same for other kind of stocks, and you can have high percentage of profits, which is very good. You don't exit the trade until you make money. If the trade doesn't go up, it is a loser. So it is a loser. You exit and you find another one. So don't wait for losers to be winners. I have never waited for a loser to be a winner, and I risk my money and I get a big loss. Because understand, if you have big losses, it's like when you lose a lot of blood from yourself, from your body, and you will faint and maybe you die. It's just because you let this blood going out. So you should stop this blood going out until in order to continue living. Okay? Now, you know, in nature, in natural, when we are in our life, we do better than when we are in the stock market. If you are working in something, in a garden, or you are working in a job, and you get a cut in your hand, you go quickly and you try to stop this blood going out from your body. Now, why you do that? Why, when you buy a stock and it's going down and you lose a lot of money and you begin to lose, you don't stop it? Okay? And you think that the blood stops by itself and you will be healthy. No, no. In our life, like in the stock market, you should protect your money from the downside if you are going long. Always protect yourself. No one will protect you, even your broker. He will never tell you, oh man, try to stop your or exit your trade, you have lost a lot of money. No, he will not advise you to do nothing. It's your problem. Okay? It's your problem. It's your business. You should do it by yourself. If you don't know, you should learn. You shouldn't just let it be like this until you lose all your money in 1 year or two. And then you go renting and you say, oh, the stock market are manipulators, there are scams, as people say. Okay, but when you are making money and you know how to make money, you say the market is fair. All the thing is fair. You see the price, you buy or you sell. Okay? No one tells you to buy, no one tells you to sell. And you take your own judgment, you make an opinion of the market. NASA says trade the ticker, not the company. Yes, yes. The ticker or the symbol in trading is what is important, not the company itself. Because if you go to the company, they begin to tell you that the company is the best company and the thing. And its stock is going down. So to whom you believe? You believe in the price that is going down? That doesn't tell that the price always telling the truth about the value of the market of that stock company? Or are you going to listen to those CEO of the companies and they boost, they say, oh, we are doing good? Okay? Don't look at these people, look at the stock. Don Jones, you say reinvest your gains. Yes, since you are in an account, if you are making money, you invest it. It means you continue to do the trade, because trading is not a lottery ticket. This is what I want to tell you. Look at any company, how they make money. They do transactions. They buy cheap, they sell high. Okay? They make money. Almost all the stores are doing this. Okay? Let's say you go to a store, either we have vegetable or fruit or grocery or whatever is the product. Okay? They buy it cheap, they sell it higher, and they make a margin of profit. You is the same. You buy stock cheaper and then it goes up, you make money, and then you close this transaction. So you are doing transactions like any other store. Okay? If your business is good, you will be making money. But if you, at the end of the year, you are losing money, what does it mean? It means that you are losing money. Okay, that's it for in general. Hello, Munyapan Muni. You come late, man. It's 1:21. Okay, but welcome, Munyapan. I haven't seen you for ages. Incredible Product says, don't wait for slipping stocks, wasting your time. Yes, slipping stocks, take a drop of something and just cover it and let it sleep. When it wakes up and it does something, okay, you can buy it at that time. That's very funny. Sophia, I say, do mutual funds also buy during IPO? Yes, it might be. If you see the stock is going up for a long trend, understand that there is someone behind. This is very simple. But it's just because you don't know how to buy the stock. That's why you can't know how things work. But Sophia, if you take, for example, training level 2, how to search for stocks, and you get the criteria, you will have an idea how things work. Okay? And how to follow the trend. If the stock is going up, how to follow it. It's not just you hold the stock for 1 month or 2 or 3 and then you make money and then you exit, because sometimes you make money in 1 month, the second month the stock is going down, it goes no more up, but you hold it and after another month you lost all your profits, and then even it goes to your money, capital money, and it takes some cut from it. So it means that you don't know how to follow a stock. And this is my goal, is to teach you how to do that in real. That's why if you see, for example, you see my live training, it's 4 months. I'm live. I will show you how the stock do today, what should I do, if I exit or not, and I will follow the stock for 4 months. This is a real practice for you. You can go to my subscription, or you can go to training level 7, how to follow an uptrend, and you find these videos, and I'm still in this trade. Some people, they ask me, oh, it's a lot of profits, why you don't exit? I don't know. I will not exit until the stock stops giving money. Okay? Until that, I will exit. Right now, no, I will not exit. Although I make some money from it, which is good money, but I will not. This is why I'm explaining how I do it. And you can do it because it's easy. You just follow steps and you practice. So, another question from Don John. He says, is investing in stock like gambling? No. See, if you want to invest in a stock, you should know the company that you are investing in and compare it with other competitor. Okay? You should compare. You should do more studies if you want to do investing. But for us here, we don't do investing. We buy stock when it's going up. When it stops going up, it means the trend, we sell. This is called swing trading that we are doing. We are not doing investing. Now, Don John, if you are going to do investing, check my training level 16. How to invest in dividend stocks. It will give you a lot of information about investing. But here we are doing only swing trading, which is short-term trading following trends. Another question from Incredible Product. He say, also another question, have you improved as a trader since last year, or when you reached a level you can improve? No, the experience that you get is with the stocks. You see different kind of stocks, and this makes your experience better and better and better. Okay? Sometimes you learn by new things happening in the market. Okay? This is, you learn them through through the years. They don't come at once. Okay? Let's say, for example, let's say 2018 we have crash in the market. What you should do? Although there is a crash in the market, you still find some stocks that go up. You will find. But it's better to use ETFs to see the sectors and industries that are going down, or most of them, and you short the whole market. This is a good thing, because if the market is still going down, you will be making money. So you just change the direction that you are going. Either you go up or you go down. So this is just a solution to the problem. Okay? So you don't just all the stocks are going down each week, and you are staying in the stocks that are going down. So you should exit and find a way to make money. Okay? Yes, Don John. Yes, swing trade. It means just you follow trends. If a stock is slipping, okay, a stock is slipping, it doesn't do nothing, or it's just a trend into a range, go up, go down, go up, go down. So these stocks, you just leave them. Now when you do my search, you will find only the stocks that have potential to go up. Okay? So you will not find the stocks that are just mostly bad stocks, that they do nothing. We are looking for a push from the mutual fund, and if you succeed, you can make a lot of money. But understand, if you want to understand how to make money from stocks, you can go to training level 5. It gives you the concept, how I look at the market and how can I make money from the stocks with the concept that I have. Okay? Because a lot of people, you see them like they say, for example, the winners and the losers versus the losers ratio. This is not true. They say, oh, I am making 70%, 75% winners, so take my strategy, you will make money. No, you will not make money because of the percentage. There are other things that they will make the money, but since they don't know them because they don't trade, they just sell maybe this strategy because they find it in the books, and they just sell it like this. Okay, because they don't understand the real trading, and they are not real traders. Or they trade and they lose all their money, and they come and they try to teach, but when you see what they say, you find that they are doing mistakes. I find a lot of people like this online. Okay, day traders, people who they are investors. They ask you to invest in penny stocks, and other they do dividend stocks. Okay, and when you ask them a question or you say to them this is wrong, that's it. It means they can't answer, they can't explain. It's just what they do. Sophia Angolo, African stocks market. Do people make money in example Johannesburg Stocks Exchange, or is it only in America? No, no, you can make money in any stock market. Because why do we have stock market? We have the stock market that the people invest in these companies. They have a lot of money. They can be successful because the company. Let's say I will give you an example to understand why we have stock market. Almost all the countries in the world, they have stock market. Those countries they don't have stock market, their industry or their economy, it will be bad. Now why is that? You have the public, it means all the population. Let's say your country, we have 30 million people. Okay? Let's say you have 10,000 companies that are small companies. Now people, they want to invest, but these companies are not public. It means they are private. When a company is private, most of the time you can't invest. It's very hard. So they go to the stock market and they get listed into exchange, so the people, they can give more money by selling shares, because these companies are sharing. Let's say they sell half of their shares. Now a share is just virtual. It has nothing, it has no value by itself. It's just virtual. For example, you say a company has 1 million shares. It doesn't mean that you go to a company and you say to them, where is my share? Where is my share? Is it that room or that product or that fixture? It is my share. No, this is just virtual. When the people, they buy that stock a lot, they like it, the stock will go up, so you make money as investor, and the company, they got a lot of money. They got a lot of money. See, for example, Google. What makes Google so big? 900. The other time it was 1100, and then they split into two, like 500, and now it is like, let's say, 900. Why the stock is going so good? It's just because the people like it, and they see in the past that the stock will be making money in 3 years. That's why they invest and they don't sell. That's why Google is good. You go to a lot of stocks, they are the same. People, they like them. But you should see, but these companies are doing good also. It's not just because they like them, but they are doing good. They are making money. That's why the stocks go up. So making money, it is in any stock, because go to your market, which is a South African market, stock market. Check the stocks. You will find that some stocks are going up. So those you can make a lot of money. But stocks that are going down, that means that the companies are bad and the people, they leave them. So don't try to buy losers and then you lose a lot of money, and then it's not good for you. Okay? So Don John, you say, so swing trading is basically day trading that takes days instead of 1 day. Yes, but it is not the same. Don John, try to understand the goals. I have spoken about the goals. The goals of swing trading is to follow trends. It means it can stay weeks, days. The stock can stay many weeks or many months. Dow Jones, I am in a stock that I am in for 4 months. So the goal that we have in swing trading is to follow trends. Now day trading, it is not to follow trends. It's just the price fluctuation. Let's say the stock opens at $10, it goes to $10.50. So you have this 50 cents, if you can get 30 cents or 10 cents, or this is what the day traders do. Okay? So make a difference, they are not the same. In goals, in techniques, it's totally different. So if you want to become a day trader, it has its own techniques, its own goals, okay? Its own strategies, they are not the same. If you are going to be a swing trader as we do, or short-term trader, you should have other techniques, other strategies, and other goals. That's why you should make the difference. Don't be mistaken. Don't buy a stock today and you lose money at the end of the day, and then you say, oh, let me hold it for tonight and see what will happen tomorrow. What will happen? If the stock is going down today, maybe it continues to go down tomorrow and you will lose more money. So this is not strategy for day trading. Day trading, you stay focused on the day. Don't go beyond that. So I hope, Don Jones, you have get the thing. And you can go to my website or my website, check the training. If you are confused what to order, just send me an email and I can help you with that. This is at least you will begin to understand the real thing about swing trading. Okay, so trends. Someone asked me a question: how long do you stay in a trend? Okay, and what is the percentage that you should take in order to exit? Okay. For these two questions, both of these questions are wrong. Okay? Yes, Don John, you can go to my website. Okay? Go to my website and check the training. Check the training and read the titles. There is a subscription also. You will get 4 training for free if you want, and the live trade I am in, and I will show you how to search. If you want all that, you should go to subscription. If you want training by training, you can begin with whatever you want. Just go there, check. If you are confused, you just send me an email. Okay? So what did I say? I say both of the questions that some people ask are false. It means they don't understand. That's why they ask these false questions. Now the question is, how long we stay in a trend? I'm telling you, there is no length of time, specific length of time. We don't know. A stock can go a few days and it stops going up, then it goes down. So a few days. Some stock stays 2 weeks or 3 weeks and then it stops, then it goes down. Other stocks, they trend for a longer time, 2 months, 3 months, 4 months, 6 months, and they are still giving money. So those are the best. Okay? Now, how much percentage in order to exit? There is no percentage. I don't believe in percentage. Because let's say you exit at 10% profit. Okay? And after a few weeks, the stock goes 50%, 70%, or 100%. So you are just exiting early. So this is not a technique to exit a trade, because some people, they use false techniques. That's why they leave money on the table. And this is a very, very bad. Okay, leaving the money on the table, it means you exit where the people are staying, and you exit because someone tells you, oh, at 10% exit the trade. Why should I exit the trade at 10%? What's the reason for that? If the stock is going to 50%, why should I exit at 10? If you are right, there are ways to see if the stock is still going up or it will go down. So my teaching teaches you how to stay longer and longer until the stock, it doesn't give no money. If at that case, okay, you exit with whatever percentage they give you. So we will never know. We will never know the time. We will never know our percentage until we exit the trade. Okay, so thank you very much. Dow John, John, you say, can I provide the link for your swing trading program? This I put it into trainings. At least you can take one training and see yourself. If this is what you are looking for and you can do it, it's very simple. You continue with us. If it's not good for you, so you find another provider. This is, at least I'm trying to make it easy for everybody. The techniques are very easy and it's not a big difficult. Okay, so this is for all for today, how I trade stocks. And if you have more questions, please ask. Someone asks me how many stocks I hold at the same time. This depends, because if you ask me, if I give you a number, it could not correspond to you. Now, why is that? Let's say you have $5,000. You can't make many positions because the account is small. You can do 2 or 3, but it is so hard when you have small account. Okay? But if you have bigger account like 100 or whatever, 200 or whatever money you have, you can make more positions and you stay with the same positions. Okay? You stay with the same positions, because this has to do with risk. Okay? Here is the rule for positions. If you buy all the money that you have one stock, this is a bit risky. If you have more positions, you have less risk. So this depends on how much money you have, how much risk you want. It depends on a lot of criteria. That's why for me, I'm trying just to give you a general idea. If you want to understand really how to calculate this, you can check training level 8, how to minimize risk and to maximize profits. This training gives you clues what to look for and how to adjust your account to the trades. And this is called position sizing. And it will show you an example or two about how much risk you incur in the trade or the whole account. Okay, so you need to learn these techniques and these concepts in order to understand what you are doing. Because if one time, let's say you have $5,000, one time you buy all your money, one time you buy only 1,000, another time 2,000. Now this will be not good for you, because you are playing with the position sizing and you don't know your risk. If you don't know your risk, you will be in trouble in the future. Okay, so understand that. So you should understand each skill you want to learn. You should understand very well. If you have problem or confusion, you just go to my website and you just send me an email and I will discuss you this thing, or you study the training and we will have a discussion, a private discussion, you and me, and I clarify everything. Although all my training are very simple, I have never seen complaints about anyone saying, oh, I don't understand this for sure. Okay, they get the idea. But what you need is, most of the time, you need practice. When you learn something, you need to practice. It's like this thing, like bodybuilding. Okay, if you want to make a great muscles, okay, you should practice. It's not by having pills or by eating certain food that the muscles will grow. Okay, that's what I mean. Yes, yes. See, wise men, when I buy stocks, I just buy whatever I see good. Small stock or a big stock, it doesn't matter for me. What I buy is what I like, and it meets my criteria, I buy it. Sometimes I even buy small stocks. The stock that I have now, I bought it like $13 something. Now it is 21. Okay, it's a small stock. It means it's not a big stock. It's just $13. So yes, both together, whatever stock, but understand that smaller stocks have more risk and more profits. Okay, let's say you buy a stock at $5. Let's say 2 weeks it goes to $10. You will make a lot of money from it, but it's risky. This $5 can go to $4 or $3 and you lose a lot of money. So you should be okay with the risk when it is a small stocks. There are some industries and sectors that are slow. You can go to these industries if you are scared of to lose money, to lose a lot of money, or you don't want to have to get good profits. If you want just little profits and less risk, there are some industries and sectors that you can go to, and you see that they are going so slow. Okay. Sometimes I show this in my subscription. I show stocks that are slow. They go slowly, and when they go down, they go slowly also. So the risk is not that big. If you like them, you can do them. Okay. So this is for today, how I trade stocks. So as I told you, let's say if you have $10,000 and you divide it into 2 or 3 or 4 positions. Let's say $10,000, you divide it into 4 positions, $2,500 each position. You are buying small stocks, for example. Okay. Now try to keep the same amount always, 2,500 for each position. Don't buy next time $5,000 one stock, and next time 2,500, and next stock $500. Now this kind of trading, it will be so hard for you. So try just to have a plan and follow your plan and see where it goes. If you are making money from this, that means that you are doing good. Okay, doing good in what you do. So don't try to for example change your plan each time. Let's say you buy a stock $20, you put stop at $19. Now tomorrow you see that the stock is going to 19.5 cents. It means it's nearly reaching your stop loss. So you get scared and you don't want to sell. So from stop loss at 19, you take it down to 18. The next day it goes nearly to 18. So this is not a plan. A plan is you should be firm. You should do a plan and you keep it. Don't play with your feelings, because feelings, when you get loss, you begin to think that you should stay. This is normal, because you don't want to lose. But the market tells you that you have already lost some money. If you are stubborn and you continue and you make more and more losses, it will be bad for you. So the MD trader says, won't that affect the amount of risk since each stock stop loss level will be different? Each stock stop loss level will be different. Yes, but the risk in that amount of money, or the risk, even if it is higher, this is because you go to stocks that have higher risk, but you can have higher profits also. So you understand that it is both sides. Higher profits with higher risk. If you have less risk, you have less profits. The MT trader says it's something that happens. So sometimes because of the stop loss level, the amount invested for each stock is not the same each time. Yes, it shouldn't be the same, because you can't put stop loss for the same for every stock. Here you break rules. So in order to understand how I put stop loss, you should go to training level 6 and study that. There are variables that you should look for in order to understand what to put stop loss. Not you put just, let's say you put percentage. You put 2% or 5% for every stock. This is not a good thing because you don't understand how to put or calculate stop loss. So this is a mistake you are doing. But you think that you have read in some books or some guru, they tell you, oh, just put percentage and that's it. This is good. No, it's not good. Okay? There are some variables that you should check before you put stop loss. Okay? For me, most of the time, I check the chart and I decide where to put it without idea of percentage or without idea of amount of money. No, I just put it where I think I will be safe. I'm not saying you will be safe 100%, but at least I know for sure, because of my experience, that it is there where the stop loss will be. If it is triggered and I lost the trade, it's one trade. I don't care about it. I will do next trade. So I will not be thinking a lot about that trade. Yes, but the MD trader, what I say is that you should allocate some money for the stock, the same money as the other stocks. This is in general, okay? Because if you let's say you put a lot of money into a high risk stock and you lose a lot of money, that will affect your account dramatically. Okay, it has a real thing. You go to a stock and you lose a big chunk of the money in that stock, and you use a lot of money. Okay, this is not a good thing to do. So you should always try to adjust and make a plan how many trades you do, and you should divide your account into some positions. NASA said the amount of shares will vary, but the amount of the money will be the same. Yes, this is what I'm saying. It means if it is $2,500, if the stock is $10, you will buy 250 shares. Okay? If the stock is, let's say, $25, you will buy only 100 shares. This is what I say, and I think NASA understood the idea, is that you just have the amount of money and you buy whatever shares from that stock. Okay? If the stock is so big, I don't think it's worth it. I don't think it's worth to buy $50 stock. If you have $2,500, if you buy a stock that it is 50, you can buy only 50 shares. Okay? So understand that sometimes it's not a good idea when you have very small account to buy bigger stocks, because you can't buy that much. And if the stock goes $1 or $2, let's say it goes $1, so you are getting only $50 from, because you bought only 50 shares. So this is a plan that you should do into your account and follow it. After a few months, 1 year or two, you will have an idea on how to adjust your account and how many positions you have, and you trade accordingly. So MD Trader says, yeah, the shares will vary. I am just saying that the risk you are comfortable with is what will control how much you invest in the stock market. Yes, this is true, but it is not only the risk that you are comfortable with. There are other things. That's why I say you should have these variables together in order to make a conclusion in what to do. It's not only one thing. Okay, it's not only one thing that you see and it makes you put the stop loss. There are many variables. Okay, and for me, when I look at the chart, I put because I have experience. Okay, and then when it is see chart, I see how they move, so I will decide where to put my stop loss. All these techniques are explained in training level 6, how to calculate the stop loss. Okay, so it means they are explained, and if you go through them, and there are still ways to make the stop loss. There is not only one way, there are many ways, and there are many variables. You should learn these variables to put a stop loss. And stop loss, it doesn't mean that it is not triggered one time. Sometimes there is a big volatility in the market, bad news or international news, or you will be exiting all the stocks sometimes, which is normal. Okay, it's better to exit on time than not to have a stop loss and the day will be bad and you lose big money. Yes, you say MD trader. Yes, that's what I am saying. When you said put the same amount of money, it sounds like you were saying we should focus on one variable, but it should be no. MD trader, understand, when we say you divide your money, this has to do to minimize risk. It has nothing to do with your trade. It has nothing to do with the stop loss. So you are mixing two subjects. If I speak about the whole risk in the account, I'm speaking about the whole risk. I'm not speaking about the risk in the trade. Understand that two subjects that are different. That's why for me, I'm trying to explain to you one subject at a time. I will not mix that with the other subject. For putting the stop loss, we have a lot of variables. Okay? Variables, it has nothing to do with your amount of money. It has to do with something else. That's why what I'm explaining. And you understand what I'm saying, I guess. So you say, sorry if I am making it confusing. No, I'm not. I am not confused with you with what you say, but what I say, there are two different risks that you should know about. Risk that it is in the whole account. This is one subject. This is how to manage your account. And there is another risk about the trade itself. These two, there are two different subjects. They are not the same. So don't mix them. If you mix them, you will be confused yourself. But for me, I'm not confused because I do it for many years. So I will not be confused about that. Okay? So that's why when you see that I made another training, that means I explain something else. When, for example, I say how to minimize risk and maximize profits, this has nothing to do with training level 6, how to calculate stop loss. It has nothing to do with it. So try not to mix the training together, because each training tries to solve a problem about one problem, not many problems. Okay? So thank you very much for watching and for coming for this session. Hope you get some information, and there are many videos I am preparing always, and I am posting on YouTube. You can just check. If you have another opinion or you have something else to tell, you can just send me an email. We can discuss that. MD Trader says, please make it clear when you mention risk with specific risk, you are talking about account risk versus. Yes. So here is the deal. When I speak about position sizing, it means how to divide your account. This is a risk, has nothing to do with the stop loss. Okay? So understand that we are speaking about the account. I'm not speaking about the stock itself, the trade that you do, because you are doing 4 trades. Let's say you have $10,000. You divide them into 4 positions. Now, when I divide, this has a risk about the account itself. It has nothing to do with how much risk I take into a stock itself. Okay? Because a stock is different from the account. You can have a risk of 4 positions in $10,000 account, but you can go and you have too much risk into your trades. This will affect your account and affects the trade itself. You have high risk. That's why you see your account risky also. It goes up, it goes down, it goes up, it goes down. Let's say you have $10,000. Sometimes you see the stock, your account is 11,000. You are making money. And then you see after a few weeks, you are 9,000. You are losing money. It's like this. It means your account will be volatile if the stock you are trading has much risk. So I am talking about 2 subjects that are totally different. Now you, am the trader. Let's see what you say. I am saying that in the future, please make it clear which risk you are talking about when you say risk. Yes, yes, yes. Here, when I say position sizing, how to divide your account depends on this risk of the account. Okay? So, that's it. Here is the rule, which I explain in training level 8. How to minimize risk and maximize profit. If the more positions, the less risk. This is about managing your account. Okay? If you are speaking about the stock trade, stop loss, risk, this has to do with the stock itself. Are you doing risky trades or less risky trades? So I'm speaking here about stop loss. Okay? But if I'm speaking about the account risk, this is training level 8. How to minimize risk and maximize profits. Okay? Good night, wise man and everybody. Yes, we will be finishing this. So I'm just waiting for just few questions and then we can stop this. So please, if you have more questions, just ask right now or send me a private message if you want to, or if you have a question, you can send me a private message. Here is my website and my email, and we can discuss this in private. Okay? So I'll just be waiting for 1 minute or 2, and if there is nothing to tell, I will be there will be a hurricane coming to our area. So if you don't see videos or there is no session or something, understand that there is trouble here with this Irma hurricane coming here. But I hope things will be okay, because they say it will become weak when it comes here. So that's it. Okay, so we will see what the future will bring us, and hope next week will be good in the market and you will be making more money. If you have problems or things, just send me an email and we can discuss this. Okay? So if there is nothing to tell, I will be closing this session and see you next week. But you can reach me at any time. Send me an email if you have some special thing and we can discuss this. Okay? So thank you very much and see you next week.